So US debt is at an all-time high right now in America, and specifically credit card debt is ballooning right now. And it's affecting people not just from home affordability, but also just personal day-to-day expenditures, the broad economy. And I wanted to just share this thought or strategy that could really help not only maybe you just watching this video, but just the general population we have in America, of ways with debt management and how it can actually help for better prosperity. So I titled this How America Can Save $12 billion per month in credit card interest. And that may sound like a big number, but the reality is it is a true stat that could happen, right? And so if we go forward here and we look at right now, US credit card debt in 2025, we're at a staggering $1.21 trillion in credit card debt. And to put that in perspective, you look at the graph here, going back to late 2018, we've seen a balloon increase of the amount of credit card debt in America. And credit card debt is not good debt. It's not secured. It's got some of the highest interest rates that you'll see in debt. And if we look at this right now, the average credit card interest rate is sitting around 20%. I see others with higher, but even if we're saying more conservative at 20%, Americans are paying around $20 billion per month just in minimum interest payments on their credit cards. That's horrible, and it's not going to any good use to build prosperity or wealth for our country. But if we were to look at this in a deeper strategy, if debt were to be refinanced, if we take all that credit card debt and refinance to a 30-year 7% mortgage, the payment would actually drop to $8 billion per month instead of being $20 billion per month. And just to put that in perspective, I'm not saying that we're going to do a massive refinance the entire credit card debt sum, but when we're looking at our personal financial situation, just to show you that right now, if all of the credit card debt were to be refinanced, we would literally lower the monthly debt load that would be paying on credit cards by $12 billion just using home equity mortgages to consolidate that. So basically the reason I'm getting that is because there's strategies right now that so many can use, and I see so many people not using it even though they have the capability of doing it. So if we look at debt relief strategies, there's a few things that are solutions for yourself, or maybe you know somebody that's struggling with this. Number one, tap into your home equity. So if you're a homeowner, you bought a home last 5, 10, 15 years, I see a lot of people that have 2-3% low mortgage rates, but they're swimming and drowning in, 15, 20, 25% interest, high interest debt. And yeah, your rate looks great, but your household blended debt ratio is actually much higher than where mortgage rates are at now. So there's ways to use home equity line of credits where you don't touch your current mortgage, or you can do a cash out refinance, consolidate all the debt into one new loan, and save a good amount of money per month. And if you put a quick example here on the right, $100,000 of credit card debt would cost the average American $1,600 to $1,700 per month. $100,000 on a mortgage costs the average person about $600 to $700 per month. And so $100,000 of personal debt could be freed up by saving somebody about $1,000 per month. And that $1,000 could be used for other investment vehicles, advanced debt pay down, other types of, starting a business, things that would provide prosperity to our economy. Second strategy here is the family banking strategy. And I see so many people, they're not even aware of this for one, or they're too afraid to ask. And so we have a lot of parents and grandparents in the United States right now that are sitting on unused massive amounts of home equity and other wealth accounts that are really not doing anything for their heirs that may even be passed on in the future. And so I'll give you an example of somebody has a $500,000 home, it's paid free and clear, and their parents have that, but their kids are going through college and they're taking out student loan debt and credit cards and they're renting. That $500,000 of equity is just sitting there, and it's not being used to help keep the wealth within the family. And so there's ways where parents and grandparents that have, unused home equity or other wealth vehicles can use that at a responsible way to lend that. So lend the money intra-family versus the interest being paid to banks and credit card companies. And so what a lot of strategies do, that I see happen is that maybe a child will go buy their first home, or maybe they're having other debts. The family, the parent, the grandparent could use their home equity, or they can use their other accounts to help create a lending situation in intra-family to keep the money within the family and grow within the family versus going to paying unneeded interest to bigger banks and credit card companies. The third thing is just a go DIY, so do it yourself method. This is let's say, worst case, let's say you don't have a home, you don't have equity, right? Let's say, your parents or your family doesn't have wealth to be able to pass on to you. It's not a problem. There's still ways to attack this. And if we look at a debt avalanche or a debt snowball method, you can Google this to go into more detail. But basically, there's two different ways of attacking debt when you're using your income to pay it down. And so I'll let you look into that on Google, but there's two really great methods, depending on what your preference is, to attacking debt. So I hope this was helpful. I just wanted to share with you what's going on right now in America with the debt crisis we're having. But it doesn't have to be a crisis if we take control about it. And there's strategies and ways to do this. But my last recommendation is you need a personal financial strategist to help you with your specific financial fingerprint and your plan. And so if you want to reach out, have a completely complimentary, confidential call or meeting, really go through your situation. I'm happy to help you. Our team and I are experts in this, and it's a really good thing to take that first step, right, and tackle your debt load and live a more prosperous future. Thank you.